The markets have not told us which direction they want to go. And I want to remind you guys that when you study charts and you analyze markets and you take risk positions, your goal is not to be proactive. Your goal is to be reactive. And that simply means that you let the market tell you where it wants to go, and then you follow along and make the big bucks. So today we started off low, we've come up, but there's no volume at all. So the markets appear to be waiting for some form of a confirmation move. We've got Tesla's earnings tomorrow. We've got Apple sitting on the edge and looking over, perhaps as if it's going to go into a free fall move. It's had a really rough year, and so has Tesla. NVIDIA was a bloodbath last week. It hit the targets that I gave you guys on my Friday show. Midday, I was telling you where it was going. Before that day finished, it hit those targets exactly. And all of this is on the heels of 2 weeks ago when I have made the prediction that the S&P 500 was ready for a minor correction. Now, the S&P 500 has been moving up in a very tight, bullish pattern, almost in an unstoppable way for months and months and months. And I had predicted that we were going to get between a 5 and 6% correction. And within 2 weeks of that prediction, we have gotten right under a 6% correction. And so now we're at a point. Markets have not rebounded. We're not getting this massive buying volume flooding in at any of these levels. And so we're going to have to sit there and wait a moment and see what happens. If the market, if some of these leading companies like Apple, if they do decide to fall off the cliff, then that's concerning. And I'm going to give you guys the lines in the sand. I'm going to give you some new technicals I've never shown you before. But when I initially go to introduce it to you, some of you might want to check out. But I'm going to make it so simple and so easy to understand. You're going to see it very easily. And I think you're going to understand why I'm presenting it to you today. You know, in technical analysis, there are some charts which largely remain neutral, and you really can't use them every day. But when situations get into an extreme moment, all of a sudden the data they present becomes relevant. And I think that happened with one of the charts I'm going to give you guys today. Let's take a minute and talk about Apple, though. So Apple, why has it been in a decline? Some people have even called Apple, I'm going to share an article with you guys, where an analyst has referred to Apple as dead money. And that's kind of concerning. Apple has been sort of the bellwether investment stock for people who wanted to take a long approach to the market that never goes down and always climbs steadily. Their leadership has been unmatched on Wall Street, and they've been a one-of-a-kind company. And for a long time, they were the #1 largest market cap company in the world. But of course, we've seen that the stock has been in decline. They got passed by Microsoft. I've pointed out to you many times that when they should have been making a new all-time high and breaking out to around 240, instead, they pretty much just made a double top. Double tops, what are confirmed, are extremely bearish. And we're sitting on the line of confirmation. So if we break and close beneath where we're at today, we will confirm a double top. And what that means is you take the distance from the low of the double top to the peaks, and you draw that out, and whatever distance that is, you bring it down. And once that double top valley gets crossed, that's how much lower you're going to go. And let me just tell you guys in advance before I even show you the chart. If that gets confirmed, Apple's going to crash. Now, here's the point I want to make with you guys about that. I've talked about Apple being an indicator. It's a quality investment. And even if it's not the leading #1 company in the world, we know they were late to AI. I've got other conspiracies about what's going on with the company. Some of those I've shared in live events and other videos. I'm not going to get into them today. But here's the thing. No matter what, if Apple's crashing, that's going to send shockwaves in the market. It will bring the market down it'll bring everything down with it. So it's an influential company, and it's going to cause people to question, if Apple's not safe to invest in, then what is? Because they've got the money, they've got the tech, they've got the leadership, they've got the history of doing things the right way. And so if the market is currently dumping their Apple bags, then what does it consider worth holding? Who is doing a better job than Apple that it's worth buying right now? So it's going to cause an impact. And so we need to keep an eye on that. And so the intro for today is we want to be reactive, not proactive. If you are trying to guess the direction right now and the market's not speaking to us, it's not confirming to us, it's spoken. It's spoken the last 3 weeks when it's come down 6%. But now it's going to confirm whether it wants to go up or continue this move down. Now, I'm going to take you guys into the S&P 500, and personally, I'm going to show you, I always just tell you before I show you, is I actually think I'm leaning bullish. The drop has not been confirmed. The pullback 6% was projected by me. And if you recall, when I told you we were going to have it, I told you that we were then going to turn around and have a bullish month, putting us back onto the trajectory of making a new high in the S&P 500 for numerous reasons. The economy's strong. We haven't gone up enough. We're still in an election year, which means that it's a low regulation environment. There's reasons for the market to climb. And people will tell me, well, Josh, what about all the bad news? What about all the bad things? What about the rumors of war? I covered that in my last video. War is good for the economy because it fires up the printing presses. And so I don't think that the down move, I don't think Wall Street is ready to crash this market just yet. I think it's got higher to climb. So let's just go into the heat map of the S&P 500. Then I'm going to take you into the SPX, and you're going to see it with your own eyes. Let's go check that out. Okay, guys, we're looking at the SPX, which measures the S&P 500. Each candle represents a week in the market. Beneath that is the RSI. And this is a little bit of a recap, but there's no problem with reminding you of what I think will happen, especially as we're trying to figure it out from week to week. Back in 2020, we had this massive fall off the cliff moment. And of course, that was responded to with a V-shaped recovery. And that put us in a move from 2020 all the way to the end of 2021, where the S&P 500 moved up in a very tight pattern, consistently climbing for almost a year and a half. Now, in that time frame, I've pointed out to you guys recently that more than once it had a 6% correction before continuing higher. And now let's go to the future. And I'd like to keep things simple, guys. We had a somewhat similar but not as aggressive V-shaped recovery back in July of 2023. We had those 3 bad months, but they were quickly followed up with a return to a progressive move forward on the S&P 500. Let me spread this out a bit. And we have been steadily climbing week after week with very few red candles. The few red candles that you see in this run-up were really less than 2% pullbacks, and that's not a correction. This move that we're experiencing right now is the first correction that we've had in this entire move up, and it is right now only a 6% correction. And this is the move that I expected. I told you guys right here that we were going to have a 6% correction that was going to be followed by 4 to 5 strong green candles pushing us all the way back up to the top of this trend. Let me just draw it out for you guys. That we were going to come all the way back up to the top of this trend, which would bring us ultimately to around 5,500. And that would be the fact that in this move up, we only had one correction. Once we get to 5,500, then we need to assess it from there. Hopefully, after looking at that with your own eyes, it makes sense why I believe what I believe, as well as the overall market conditions that I believe are still in place that can push this market higher. We're in an election year. The Fed is telling us that inflation is strong, which means that the economy is strong. It's why the price of goods are going up and not down, because demand is still too strong, and that's what raising the rates does. It slows down demand because it slows down access to easy money. But now let's segue here, guys. Now, real quick, this is the Stocks with Josh show. Thank you for joining me today. I appreciate the likes. It feeds the algorithm. You got to hit that subscribe so you do not miss these market commentaries. I give these predictions. The last prediction that I gave, that the market was poised for a 6% pullback or correction, has come to pass. I'm now telling you guys today that we have to wait and watch these markets and react to them, not try to be proactive to them. But I am also predicting that my bias at the moment is that the next 2 weeks will produce for us a green move higher. That's what I'm watching for. And the minute I see it, I'm going to believe it, and I'm going to then let go of any puts which have been profitable, and I'm going to be putting into the buys, the calls that are going to push the market higher. Don't miss the moves. We're simply in volatility at the moment, and that's normal from how tight of a movement we've had coming up for the last 6 months. Okay, talk about a couple big, important, heavy hitter, big tech stocks here today. Before I get into that, let me take a very quick station break for the MOOMOO investment app. Guys, if you need better trade tools, this is one of the best mobile charting tools that I've come across. If I can't sit at my desk and use my TradingView platform, I prefer to use the MOOMOO account. They also have the best news. Now, if you open up a new account and you fund it with a minimum of $100 here in the United States, they're going to give you 10 fractional shares. They're now doing fractional shares, which means that you don't have to buy an entire Apple stock or an entire Tesla stock. You can just buy $5 a day if you want to try to take advantage of buying some of these companies that are on the dip. As well as that, if you just leave money sitting in there uninvested and accumulating, you can earn a 5.1% interest rate, which is way better than the banks. So I want you to check out the link that I post in the top pinned comment if you need better trade tools. Okay, let's get into the next stock I want to cover, and that's the big boy, Apple stock, the Apple indicator. If Wall Street doesn't want to own Apple, then you have to seriously question what else out there is worth owning right now. And one analyst calls Apple stock dead money. Let me share that article with you guys. Apple stock is dead money, according to one Wall Street analyst. Maxim Group initiated Apple stock with a hold rating and a $178 price target on Wednesday. Let me just explain that to you guys, because some people get excited when they see a price of $178. They say, okay, that's pretty good, Josh. It's better than where it's currently sitting. Guys, when they give you that price target of 178, that's a target, which means it's not something that it's at right now. And most of these analysts are giving a 6 to 12 month price prediction. And so what this analyst is saying, that maybe this will get to 178 6 to 12 months from now, which is actually quite bearish. The big concern is centered around Apple's vulnerability to slowing iPhone sales in China. iPhone sales account for the majority of Apple's profit, making the China situation a real drag on growth for Apple. Now, Apple's priced as a growth stock, and what they're telling you is that they're not going to be growing right now. Apple stock is in a funk, late to the artificial intelligence game. I've covered that many times. They were trying to build an Apple car, and they should have been dumping their money into AI, revolutionizing their platform, revolutionizing Siri, making Siri an AI-driven software. Some people will say, well, it is, Josh, kinda. No, these guys are late to the party. Everybody knows it. And so far, it's caused the stock to really come under selling pressure. It's been a real disappointment to the shareholders. The latest data on iPhone sales is disheartening. Shipments are down 37% year to date in China. Guys, it's a real big problem. Now, here's the big question. Is it come down enough? Has all of this negativity been priced in, and has it been taken into an account so that by the time we get to this earnings, if it's not as bad as Wall Street had thought, could this potentially be a bullish moment? Could we be getting it at a discount and all of the negativity has been priced in and we continue on to the uptrend? Well, honestly, I don't know that. Okay, I cannot tell you that I know that. That's a fundamental story. That's going to be a news story. The sign does not point to that right now, but the charts will confirm for us. When that information is available, the charts will tell you, yes, it's been confirmed there's more trouble ahead, and not enough downward price pressure has been put into this stock. So let's go into the charts and see what they're saying. Okay, I've been warning about this yellow descending line of resistance. We had 1 week where we attempted to break out. If you guys are becoming better charters, let me share with you what we needed to see if this one green candle was going to be an indication of a reversal moment. We needed the next week's candle to open above that yellow line and to close above that yellow line. Then that would have confirmed to us that Apple was going to go on back to its previous all-time high and then potentially move higher, but we didn't get that. We actually got the opposite. The next candle closed beneath that yellow line, confirming more of a downturn ahead, and that's exactly what we got. It fell even further. Now, let's keep things really clear. I've shown you guys this before. Double tops, they're way bearish. Confirmation of the double top is when this opens and closes beneath the lowest price of the valley. Okay, so here's the valley. Even though you got a smiley face looking at you, this isn't a good chart. So now, technically, depending on how you view this and exactly what point you're looking for it to confirm, we may have already gotten a confirmation of the fact that it's going lower. However, I'm going to keep it very simple. We're going to use the opening price of the previous week and the closing price as the gauge for whether this is going bullish or bearish. The closing price was 165 even. Well, guess what? So for this to be absolutely confirmed, we needed this. If you wanted to go short on Apple, you needed this to essentially open beneath 165, and this morning it opened at 165.52. Not a confirmation yet of the big downward move. Now, we can still get this confirmation, but this has to open and close beneath 165. And so it's sitting here with this little candle on the edge of either a move up or a continued move down. If we get that, it will definitely confirm the double top that we've had for quite a while, and that would mean that we would probably, in the course of 1 week, flush down to 156. That's previous structure resistance. It will now serve as structure support, and it'll give us a little bit of a bounce. However, if we do get that official confirmation and we do head down to 156, all the bounces that we get after that should be used to essentially short the stock further, because the move, the expected move that we would be looking for based on this double top up here, this smiley face that's not really a true happy face, it means that our target would be 149. So again, we're in a situation, we're in a waiting game on Apple. The main reason why I'm covering it today is for you guys to understand that you should keep an eye on Apple, because if we do get this confirmation of a bearish move, which will be pointing me to a destination of $149 with a brief stop at 156, that's going to put a drag on the rest of the market, and it goes against the bullish scenario that I see in the SPX and the S&P 500. Which means that since we've not confirmed Apple yet, and I largely believe that the S&P 500 is poised for a bounce and a return back up, it may mean that Apple right now is not ready to confirm that big move down to 149. So it could be on hold. And we may, like I said, have that couple weeks up. So again, you know, I prepare this content. The charts are clear to me, but it's another thing for me to explain them to you guys and to explain the action points to them. I know that there are some great analysts out there who see this and understand it. I connect with them in the comment section. Feel free to ask me questions. I'll do my best. But we have to cover Tesla because tomorrow is earnings. There's a ton of bearish news on Tesla. And then I've got that new chart, that new indicator that I'm going to share with you guys regarding Tesla. And it may be pointing to which direction Tesla is going to go. Let's get into that news story and then we'll go from there. All right. Tesla stock fell over 9% after past 4 earnings. So what is this telling you guys? The trend is that every time we have an earnings, Apple falls at least 9%. So what's exactly happened? Tesla's shares have reacted negatively to earnings of each of the 4 past quarters, beginning in the first quarter of 2023. Back in Q1 of 2023, it was in line. They fell 10%. Q2 of 2023, it was a beat. They fell 9.74%, 10%. In Q3 of 2023, they have it as a miss. That fell again, 10%. So in line, beat, or miss, Wall Street's been slowly shedding shares. And then we've got Q4 of 2023. It was again a miss. This time it went down a little bit more, 12%. Given the company's fundamentals have not improved since then and have only deteriorated, the stock could likely swoon yet again post-earnings. The only consolation is that much of the negativity is already priced in. And that's where I wanted us to leave off before we go into the charts. All right, guys, we're looking at Tesla's chart. I've shown you this chart, and here's the main thing I want you guys to take away. we have the mother of all historic ascending trend lines that we are sitting on right now. We go back in time when the initial breakout occurred. It backtested this line, starting the journey. We came back in 2023. We touched this line. That's what sort of created the pattern. And now we are here again at 140, which was the price prediction that I gave you guys. I said that we were destined to get here, and here we are. And we are now sitting on the line again. Now, I'm looking at the weekly time frame. This is the mother of all trend lines, and we're going to go through some very important charting tools, ideas. One of the first things that I want to point out to you guys is that we do not have the type of candle that I like to see when we come back to a historic trend line, which is a buyer's candle. It's a hammer candle. The one that we previously got was a hammer candle. Let's zoom in on it. This is a clear hammer candle. We've got a nice body up here with a long tail, showing that when the price got down to $101, that the market loved it at that price and the buyers bought it up, creating a reversal scenario that then led to the massive move back up to 300. Well, let's go look at the candle we've got right now. Okay, this is a little bit more of a doji candle at the moment. It's got a small body, a little tail at the bottom, a little wick at the top. This is largely indecision. We've come down, we've hit this ascending line, and the market's trying to decide. Same thing I showed you with the SPY, same thing I showed you with Apple stock. It's trying to wait for whatever information it needs to confirm a move up. But let me just remind you guys of some of the things that we might get. And the minute we get these, we know which direction things are going to go. So we're going to react, not be proactive. So what would we be looking for? Well, I mentioned this candle to you guys recently. If this turns out to be an abandoned baby, which is a bullish candlestick pattern, it means that the next weekly candle will actually open above the current top of the opening price of this candle, which is at 142. It will open up here and it will then go higher, and making this the abandoned baby left behind by these two candles in the future. Now, we don't have that yet. We don't have a bullish hammer candle like we did here in the past. We've yet to get a confirmation on which direction this is going to go, but here's the types of things I'm going to come back and tell you. If we got a green candle and it's parallel to this red candle, then it's time to let go of your bearish bias and realize that the market has already priced in the bad news and sees that Tesla is worth more than its current price. So you don't want to be sitting there sticking in a incorrect bias after the charts tell you which direction they want to go. Now, on the same turn, if this opens beneath this white line, and you guys have heard me say it, if it opens and closes this week or next week beneath this 140 price range, then you also need to stop being bullish. You need to realize that the market wants a lower price out of Tesla before they're willing to own the stock and willing to take a long-term hold of it. That they believe that they're going to continue to face bearish pressure, that are not in a growth cycle, and the stock will continue to go down until growth is back on the table. Where will it go? For a fact, it will quickly fall and descend to $120, and in my mind, it could get there in 1 week. And so we were going to know very soon whether we're on our way to 120. If we get the beginnings of a green candle above 140 next week, then we are back on our way to 160. And so we're sitting at 140, and we are right in the middle. And the next move that Tesla makes, which is going to be probably established earnings tomorrow, and I will tell you what I see in the charts when we see that day finish up, that's going to tell us whether we are on our way to 160 or on our way to 120. If we do begin the journey down to 120, I'm going to put very little confidence in that being the final destination price, because in my mind, for a fact, if this becomes a reality, if this begins to happen, which right now it's not been confirmed, then we need to accept it's not a 120 stock, it's a 112 stock. And that's how I'm going to plan accordingly, which means I'm going to load up on puts and ride it all the way down to 112. And only when we get to 112 will I reverse and go long. All right, so that is where we're at. I hope that was clear with you guys. Now I'm going to show you an interesting new indicator that I've not shown you before. It's called the PCR. It's the put to call ratio. And it's meant to indicate how bearish or bullish the sentiment is around the stock at the moment. Now here's the way it's used. It's used as a contrarian indicator, because when bearishness gets to an all-time high, when a stock has been moving down, that typically means that the bears are wrong, because the majority of bears will pile in at the end of the move. And so if we have the highest put to call ratio and it's nothing but bears in at an unprecedented level in the past, that would signal that a reversal is right around the corner. So the way that this works specifically for those who are slightly more techie, don't check out, it's not that hard, is that it's got a middle line, 1. Anything greater than 1 means that it's got more puts than calls. Anything beneath 1, anything less than 1, means that it has more calls than puts and that it's bullish. So let's check out what that chart tells us right now about Tesla. Are we going to get a reversal in the next week? Okay, I've got the PCTS pulled up, which is the puts to call ratio. It's on the daily time frame, and let me just make it simple for you guys. That white line that you see running right down the middle, that is the 1 mark. And remember, anything above 1 means that it's got a higher put to call ratio. Anything beneath 1 means it's got a higher call to put ratio. More calls if it's beneath 1, more puts if it's above 1. So what I want you guys to see is that it rarely gets as high as it has gotten in the last month, okay? So 3 times we got extremely close to this 1.74 level. Now let's just talk about what that level means in the past. So the trend was basically telling everybody this was going down, but it wasn't. It was getting ready to explode. And the fact that all the bears piled up, pushing the ratio all the way to 1.75 was a foreshadowing of the fact that the price was going to go higher. And we saw it reach that same level again when the price back in 2023 hit $101. The bears were screaming, it's going to go even lower, and the indicator shot up the put to call ratio all the way back to that 1.7 level. And sure enough, we only went higher from there. Well, now we have actually come right under that 1.74, 1.75 level. We've actually done it 3 times in the last 30 days, which means that the bears have been getting ahead of themselves, getting excessively bearish, and we rarely get this degree of puts above calls. The only time we get it this high is when we're getting ready to have a big reversal. And so the PCR is pointing to the fact that the bears might be piling in at the end of the down move. So I'm going to leave that there today. Mostly the message of today's video was, let's be reactive, not proactive. The market is sitting on the edge. The S&P 500, Apple, Tesla, Nvidia, all of them are sitting on the ledge. So just pause and let's wait and see which direction it goes. If it's going to be a reversal, I lean towards a bullish reversal. I predicted this 6% downturn. Market conditions hasn't really changed. The market conditions that brought us up to the levels that we're currently sitting at can take us to 5,500. But instead of getting ahead of that, let's wait until we get a confirmation. I'm teaching you the technicals. I'm showing you what confirmations would look like and what we need to see to know whether we're going higher or lower. And at the moment, I'm watching for a higher move, but this week may just finish indecisive. Tesla will be a story that's told tomorrow, and I'm going to be watching for a reversal there. If we get that move and that open and close beneath 140 over the next week, I will be shorting Tesla down to 112, and I will have a high level of conviction that we're going to get there. If Apple falls off the cliff, if we open beneath 165, that will be the bearish confirmation. And again, I will be shorting Apple down to 150. And if the S&P 500 falls apart right now and gives me greater than a 6% pullback, we're right beneath 6% now. If we get a greater than 6% pullback, then I can't call it the expected correction, and I've got to recognize that we might be setting up for a bigger shift. Not confirmed. Tomorrow I'll come back and I'll do another video and let you guys know what I see. I will tell you, things are heating up. Tons of money's getting made. I saw a clip on a guy that had made $100,000 in advance of this S&P 500 move, where he had gotten far out of the money, short expiration options, and when that market began to fall, he put in $1,000 and he made massive gains. I'm not a big lotto trader. My moves are more strategic. I sort of stay in my lane. I don't do a lot of lotto trades, but I did know the same thing he saw, that this was going to happen. And so I did think to myself, Josh, maybe you should do some more lotto trades because you're seeing the direction. And so if you're right, you know, obviously there are some scenarios that can pay out big. Guys, I will be in the Discord. I will be providing some more technicals there. I've got Technical Tuesdays tomorrow with Tim, another live, and we're going to chop it up. We're going to be talking stocks and crypto. We'll be talking, I'm sure, again about Tesla. Feel free to join me. I've got some thoughts on SoundHound. I've got some thoughts on APLD, as well as some other cryptos I want to share with you guys. We're going to dive into Ethereum a little bit tomorrow, and I've got some other great shows for you. So hit that subscribe so you don't miss it, and hit that all notifications bell so you know when we're getting live. Appreciate each and every one of you guys. Hope you have a blessed day and make some money. Peace and blessings. We'll talk to you soon.